as we were saying, the price of platinum, got interrupted there by the old boss at work, had a big drop during the '08 from about 13, where was this, about $600 all the way down to 162. But then it had a euphoric run all the way into the COVID blow off top from the bottom of '09, and we went up to $3,500. And now you can see platinum has been down. It's been beaten down big, and you've seen these with a lot of your crypto coins. But palladium and platinum, in this case palladium, they have a use case. You can see it's been down as much as 76%, and at current price it's still down 69.69%. And in the monthly time frame, it's just trying to get above the 200-day moving average. And if it does get above that, which it is just above it right now, you'll have a quick move just like palladium, and you can move all the way up here to about $1,300 very quickly. And historically, palladium is more expensive than gold, because you can see back here in 2011, palladium was all the way up here. It was cheaper than gold. Even back there, 2011, yeah, $853. Gold was at about $1,900. But usually palladium gets more expensive than gold, right? You can see back in '08, it was at $600, and gold wasn't that high. And then it rolls all the way up here to $3,417, kind of where gold is now. So this is something on Commodity Monday I just wanted to bring up, that I'm going to be continuing to watch, because I think there could be a very good play there in a palladium and platinum. You can see copper is way up there. Gold bullion is down $14 an ounce, or 0.41%. Silver bullion is up slightly. The mining stocks are even. I think it's going to be a very explosive week. You can see Rivion's checking in slightly up, but it's down about $3 a share since its brief high that it had a couple of weeks ago. So it's something that we're still watching out for, but I still am a very, very heavy investor in Rivian for the long term. That's another one of our steady investments over a long period of time. But if we get into the cryptocurrencies, you can see the Bitcoin, and across the board, there wasn't a big move or anything crazy this weekend. You can see the Bitcoin price this morning. We went over sort of our thesis, and you know what we've been talking about the last several weeks and months, and where we're at, and still don't want to buy you. If we zoom in here out of a monthly time frame and we get in here to the daily time frame, we can see got to update the moving averages. You can see where the 50-day moving average is. We've been trading long enough sideways to where the 50-day is catching up to the price. You can see the 100-day moving average is above now a critical support level. Come on. Sitting here at 98,000 and change. And the 200-day moving average is sitting down here at 92,000. And we do know what we're watching for this week is, are we going to continue to see this price consolidate sideways and eventually turn back to the downside and retest some of these lower lows, like the moving average is starting at 102,000 and ending at 92,000, a 10,000 spread between the 50-day and the daily and the 200-day and the daily. And then you got a major support level at 96, a major support level at 90, and then the critical support level where this double bounce bottom started with this run down here at 74,000 and change. So you do know in the short term what we're watching for this week is what happens. Do we make a left turn to the south and we start trading down through these moving averages, or do we continue to get bounced off the 50-day moving average like you do here, right? And then you end up getting bounced up and start to turn back to the upside like this, right? So that's something that we're watching out for this week with the Bitcoin price. And if we move along to the Ethereum price, you can see Ethereum is still consolidating beautifully just on top of or above the 200-day moving average. And so we really have nothing to change here, where everything is still a status quo from over the weekend. So this will be a brief update. We're still trading sideways just along and above the 2,479.92 200-day moving average. Then you have the 50 and the 100 all trading horizontally, all trading right next to each other. And if you continue to hold this, you can bounce up to 3,058.75. But if you break these three moving averages right here, you'll have a quick pump down to the 1816.71 top part of this blue major support zone. That's a big spread from bottom to top. But your moving averages that are lined up right here from long term medium, short term to medium term, you break and get below these three, you're bearish coming down here, you continue to stay above these three, bam, you can come up to there. So that's what we're looking at in the short term. The XLM is the same thing. You can see we've had this great consolidation off of our major euphoric pump that culminated with the Grayscale Trust, and we've traded sideways to down. We've been talking about how there will be better buying opportunities, bam, bam, ham, and now we're here, and we're at this critical spot, because if we bounce off of here, we're going to start to turn back up to this 43 cents and potentially all the way up to a all-time high in the 80s over the next 6 months to a year and a half. Or we have to come back down to these targets that we've been talking to and thinking we would come down to in our big accumulation zone, to where we are, and I will be adding in to my position in XLM. Jabroni Killer members will be getting, only Jabroni Killer Update members will know when I buy, and members only post. And these are my targets: 18 cents, 14 cents. And if we had a God-given ability to, I don't think we're ever getting back down there, but these are my heavy accumulation zones to add into my XLM. I will nibble a couple of the thousand shares here, then I will go heavy into adding into my bag at 14 cents. But right now, what you're looking at, because long term, I think we're going over $1 in the XLM price as we get our way into mid to late 2026 through 2027. I think it will be well over $1. And I think these will be a short but great accumulation zones. And right now, what you're looking at is the same thing as you were looking at with the Bitcoin price. Is right now the XLM price is at a freshly minted bearish cross. We have a quickly falling 100-day moving average. Come on, click it. Quickly falling 100-day moving average. That's just below a falling 200-day, but slowly moving down. 200-day moving average. It's forcing the price down. And what I'm feeling like, and what I'm seeing, and what we've been forecasting and keeping out of ahead of with the truth, trust, education, and information for you, this vital information and time sensitive, valuable to keep you an asset millionaire on our way to asset millionaires, as we've been slowly 401k consistently investing, cryptocurrency investing, gold and silver bullion and mining stock investing, along with real estate, to become asset millionaires. And over the steady, continuous process and executing our plan, we are almost 50% there to be an asset millionaire. And with you and me along the way, we will do this together, and you guys can do it too. If I can do it, you can do it. And so far as a journey along, we have gotten our way to almost 50% our way to becoming asset millionaires, right? And to have a nice, comfortable standard of living. But a way that could help you is accumulating this, again, at a good time. We had the blow off top started from about the 8, 9, 10 cents, went up to 63 cents. We've peaked as low as 20 cents, and we've been forecasting since we were back here of great accumulations. Don't get fleeced. Don't get fleeced. Accumulate, accumulate, if possible, accumulate. But that day might have come. But you accumulate here, here, and not there after all that. This is when you accumulate. You have a longer period of time down here. The hysteria cools off. The emotional swings settle, and you can make educated decisions confidently, right? And what's happening here is if you get below this 26 cents, you will come down here in the short term, and that's what we're watching. Is do you have a divergence up, or do you break to the downside? Which, if these moving averages keep trending down, you'll slip below this 25 cents, force below it, flip it to a major resistance, and then that will quickly fall down to these lower targets. And that's something that we're watching. But we do know in the long term, you can see where this plays out. I think over the long period, I think we're going to have an end game of this current bull market after mid-ground consolidation in all these coins. And I think long term, you can see late 26 going into 27, we could be as high as $4 in XLM, or as late as 2027, 2028, somewhere about $1.55. You can see the spread. But one thing I think we're going to be above is I think we will be, by 2026 going into 2027, I think we will be over $1 in the XLM price. So prepare and plan accordingly. The same thing with the XRP price. You can see we have big targets out into the future, because I think this bull market is just in the mid cycle of this current bull market. But I think there's that mid ground consolidation before we get out here into 2026 and 2027, where we have a big spread. Some of them are only at 90 cents, but most of them are up here at $4, $5, $6, potentially $7. And I do think we'll be above $4 and $5 range by late 2026 or 2027. But first, at the XL or the XRP price, what I do believe is there's going to be a better consolidation zone or accumulation zone if you haven't bought any, or it's been a while and you want to add to your stack. I think you're going to have a great, brief but great before this next leg of this kicks off after this mid-ground consolidation, where I think you could be as low as $1.29 and have a great accumulation zone down there, and potentially as low as the 87 cents to the 69 cents. Less likely here, somewhat plausible here, but very likely I believe we're coming down here. But right now we're still bouncing on the neckline support, still below. We're trading above the neckline and 200-day moving average, but just below the 50 and 100-day moving average. We've been trading sideways in between those two zones consistently since the 29th of May, and eventually this is going to break out. If it breaks to the upside, you'll come straight up to this upper resistance at 255. If you breach this, you'll quickly come and confirm this as a major resistance zone, something that has had support over the last 6 months on the neckline support. But if you flip this and it becomes a major resistance, you'll drop the price quickly to $1.61, followed by a brief pump, but then eventually get driven down very, very quickly to the $1.29 level. And that's something that we have to pay attention to here in the XRP price, and we will continue to follow this. But I believe in all of these coins, and I can't stress this enough, that this is just a mid-ground consolidation in these coins. And I believe there's going to be a big, big bull market here going into 2026, into 2027. Another one of my big bullishness, which could become a flop in the next couple of years if it doesn't pan out. But I think there's a big pump and a big move that will happen in the AMP as we continue to travel through 2026 and the 2025 into 2026, as I believe this was the wakening up phase right here after a 96 to 98% collapse from its all-time high. We hit our 0.0166 high, consolidated on support, pumped slightly lower than this high, consolidated down on the support, and now we're pumping again, trying to form a double bottom to get back above the moving averages to make our third run up here at this, which is forming like a flag right here. And this is your pull, and then the point of a breakout in a bullish fashion would get you all the way up here to 0.114 cents, which is about 10 to 11 cents. And that is very, very plausible. And that is something that I think might actually be happening. And the reason that we've been in this longer consolidation is the pattern just needed a longer time to build up, to coil up, to gather momentum and strength, to really break in a forceful way this big downturn since this coin came out, when we were up here at about 11 cents. And then we came all the way down here at a 98, 99% dump. And I think this in 2024 was the wake up. And then a lot of these coins pumped to new highs, or at least existing highs from the COVID. This, I feel like, has to consolidate longer, and that's what it's doing, because it's going to make a very, very big move. And that's what I think is going on here. Could this always break to the downside, and this could be just another one of these coins out of the tens of thousands that are just going to squiggle and inch their way to zero? Yes, but I believe that if you've accumulated this and not accumulated on the pumps, don't accumulate there, don't accumulate there, accumulate there, accumulate here, and accumulate there. I believe that there will be a big reward here over the next couple of years if you just have the patience and don't buy the big pumps, but buy the big dumps like what we've had recently, and reap the rewards, as I do believe from current price that this will eventually, at some point in the medium-term future, meaning next year, by the end of next year, we're going to go up between this level and this level, and that's a 6 to 14x move from the current price, right? So I am very, very bullish on that, similar to what Algo did, and then it got heavily rejected, something that we were talking about, that it possibly and most likely would do up there at the 53 cents And now we're below all the moving averages and we're below this critical 20 cents. And what we need to do here is get back above this 20 cents to try to trade back up towards the bottom part of this resistance box, which just so happens to be in the daily time frame, the 200-day moving average, or in the daily time frame, it happens to be just above the 200-day moving average. 200-day moving average has been trending south, and this major 20-cent zone is just below the 50-day moving average. So what you need to do if you want to get bullish again is first, you got a lot of work to do. You got to get above the 20 cents, and then got to fight through these moving averages and sit on top of the bottom part of this red resistance box up there at about 24 cents, right? If you keep getting rejected down, you will come back all the way to this 10 cents, an area that we talked about back as this was coming back through here over December, January, February, and March, late winter and early spring, an area that we could retest, which was the pre-pump point pivot to the upside, right? And that could happen if we can't get some of the bulls to come back into the market. XCN's the same thing. We're having a bearish cross here now. This will happen in the next 48 hours. You can see the 50 is about to swing back below for the first time since this pump back in April, below the 100-day moving average. The 200-day is sitting just above the price. We're getting heavily rejected. We're now digging deeper into this purple resistance box. And with these moving averages about to converge on each other and have a bearish cross, that could be just what this needs to drop this all the way back down to the 0.00795. Something that we're going to be watching out for, and something in XCN you should be watching out for. Like the channel, subscribe. We'll have some more updates at noontime, lunchtime update. Peace and love. The Rex Eyebrow. Bye.